Okay, so Mark Cuban just said something that's been bothering everyone in the AI space, and now the all-in guys won't shut up about it. The thing is, he's right, and that's the problem. He said unprofitable data centers are going to become pickleball courts. Not as a joke, as a genuine prediction about what happens to the infrastructure when the AI Capex party stops making sense. And the reason that landed so hard is because it's not actually crazy, it's just uncomfortable. Because right now, Elon is betting his entire XAI strategy on the idea that compute will never stop being valuable. Tesla's Dojo, XAI's Colossus. These aren't small bets. We're talking about billions in infrastructure that only makes sense if training models remains infinitely profitable. But what if it isn't? What if in 18 months, everyone realizes they massively overbuilt and the economics collapse? That's when the pickleball courts thing stops being a punchline. Here's the actual tension. Invest Answers flagged this as the decisive factor in the AGI race. The winner isn't the one with the best model, it's the one with the cheapest compute. That's Elon's entire thesis. He doesn't want to compete on model architecture. He wants to compete on power efficiency and cost per flop. So he builds Dojo, so he builds Colossus. The bet is simple. If I control the hardware, I control the training, I control the model, I own AGI adjacency. That's not insane. That's actually coherent. But it only works if the underlying assumption holds. Infinite ROI on training spend. And right now, nobody's seriously questioning that assumption. Everyone's too busy racing to spend money. The numbers are wild. Nvidia is making more money in a year than it made in the entire previous decade. Microsoft is spending tens of billions on data centers. Meta, Google, Amazon, everyone's pushing Capex higher. The logic is that whoever builds the most capacity wins. First mover advantage. Locked-in customer relationships. You can't retrain on someone else's hardware. So the race accelerates. And Elon's in the middle of it, but with a twist. He's not just buying Nvidia chips like everyone else, he's trying to build the alternative. He's trying to become Nvidia. That's Dojo. That's the whole game. But here's the thing nobody wants to say out loud. What if the Capex overshoot is real? What if we're 6 months away from discovering that everyone built way too much compute for what the market actually needs? The bears have a specific timeline on this. 24 months. They're saying by 2026, we'll know if the ROI actually exists or if it was just the hype cycle. And if it's the latter, you have billions in stranded assets. Data centers optimized for models that don't justify their power costs. Colossus becomes expensive real estate. Dojo becomes Tesla's most expensive failed moonshot. And all that infrastructure gets repurposed for something cheaper. Like, yes, pickleball courts, or cold storage, or they just sit empty. Now here's where Elon's position gets interesting. He's not as exposed as Nvidia is. Nvidia built its entire valuation on the assumption that training compute never stops scaling. That's actually fragile. Elon's more diversified. Tesla's still a car company. XAI is a bet, but it's not his whole balance sheet. So even if Colossus becomes a liability, it doesn't kill the empire, but it does kill a critical part of his strategy. And that matters because his entire AI play depends on controlling the hardware. If Dojo and Colossus become white elephants, he loses that control. He goes back to buying chips from Nvidia like everyone else, and the whole narrative falls apart. Here's the thing that's actually worth watching. The market's pricing in infinite compute ROI. It's priced into Nvidia's valuation. It's priced into Tesla's energy strategy. It's priced into the entire AI Capex arms race. But the moment someone has to write down infrastructure investment or announce they're scaling back spending, the narrative cracks. And once one company does it, everyone does. The behavior cascades, you get margin compression, you get stranded assets, you get a reckoning. Elon's bet that he can own the compute layer and the model layer is audacious, but it only works if the entire economic foundation is sound. And right now, everyone's moving too fast to really question that. They're all in a prisoner's dilemma. If you don't spend, someone else does, and they get ahead. So you spend, everybody spends. But eventually, someone runs the numbers and realizes it doesn't add up. That's when the pickleball court's comment stops being funny. So here's what I'm actually watching, not the Capex numbers. Everyone's going to keep spending for at least another year. The thing to watch is margin. When AI training margins start compressing, That's the signal that the ROI assumption is cracking. When the big spenders have to justify higher power costs against flatter model improvements, that's when the real conversation starts. And whether Dojo can actually compete on cost if the economics get brutal. Because if Elon bet wrong on the power efficiency angle, or if the chip improvements just stop compressing costs, then he's got billions in infrastructure that's worth less than the debt taken to build it. Drop a comment if you think the Capex cycle has 2 years left, or if you think we're already seeing the margins compress, because I'm actually not sure. It could be both. And speaking of infrastructure people built that might not pan out, a long-lost Pokemon game just resurfaced on eBay. A rare fishing contest DS cartridge that vanished decades ago, supposedly worth thousands to collectors. But here's the thing. Zero documentation, unexplained provenance, could be a holy grail, could be an elaborate hoax. The whole thing's a perfect metaphor for stranded assets, actually. Someone bet billions on something they thought would hold value forever. Turns out you never really know until the market decides. Okay, that's a wrap. Subscribe for the daily market brain dump. Have a good one.